All right. Hello, everybody. I have with me Jessica Eichenburg with ACP Accounting, wife, accountant, mother, sibling. She wears a lot of different hats, and we are going to ask her some questions about the accounting side of things. So, when do you need to get an accountant? What are the different business structures? What kind of considerations do you maybe need to look at so that you guys feel really educated as you're starting your journey becoming a financial coach? Jessica, thank you for taking the time to talk with us today and educate everybody on all things accounting, right?
Right. All things accounting.
So tell everybody a little bit about you, how you maybe got started, who your ideal client is, all that jazz.
So I had been in the accounting industry for 15 or 16 years now. And I worked for a CPA. So it was kind of crazy. I worked for her and I was just like her secretary. And I was going to school and she said, no matter what you do, you should have an accounting background. And I was like, well, that's strange. And so I started taking these accounting courses at the college and I loved it. So we moved out to Arizona about 8 years ago and opened our practice then. So it was just me. And now my husband is here and we have a few employees and things like that. So kind of just all snowballed.
Yeah, one step at a time, right? And who do you mostly help?
So our focus is really small business, and typically less than 20 employees. That's kind of where our niche is most. So a lot of times what we see is like a couple ran business or a spouse ran business, and they're just kind of doing everything themselves. So they don't really have time to look at any of the numbers. They don't know what they mean. We do the most of S Corp conversions. So that's kind of what our wheelhouse has always been. Somebody who pays a lot of taxes, who's always stayed as a sole proprietor, kind of that conversion process is where we spend most of our time.
Got it. And when you say that you moved here from Arizona, where did you move from? Where are you from?
Well, I'm from Florida, but I moved from Missouri.
Missouri.
So I've been all over.
Yeah, but I do think sometimes people will hear the Missourian accent come out.
Yeah.
So that's why I wanted to.
I don't know why the Florida accent didn't stay. I got stuck with the Southern accent.
I don't know either. I don't know. But I definitely hear it sometimes when you talk. So that's why I wanted to ask you. Okay, so you are an enrolled agent. Please explain what that is.
So an enrolled agent, so everybody's pretty familiar with the CPA structure. You go to school for X amount of years, you take a big CPA exam afterwards, and then you're allowed to practice in that state. And then if you move states, you have to retake the exam, so to speak. Your degree always follows you. So the IRS decided to add their own level of clearance. We have the same benefits or license requirements as a CPA does, except for we're licensed by the IRS. So we're licensed on a federal level. So we had to have some school because there's no way you could pass the test without school, but it kind of took everything into consideration, like school, how many years you've been in practice before you could take the exam. So, and it's an exam very similar to a CPA exam, but as far as the IRS goes, there's no difference other than I can practice in any state. So if I move, I don't have to retest.
Got it. And do you practice in any state or do you tend to focus mostly on Arizona businesses? What do you do?
There are a few states that we practice in, and it's kind of crazy how it happens. Mostly Arizona is kind of where our focus is, but Arizona has a lot of crossover with California. So I feel like if you live in Arizona, you got to know California tax law.
True.
If your state doesn't have a state tax return, like Florida, those guys are super easy to work with because there's no state taxes involved. Otherwise, we work with Missouri clients still, and North Carolina. I don't know how that happens, but now we have a ton of clients in North Carolina.
Got it.
But otherwise, primarily Arizona.
Got it. Okay. So help people understand the steps that they need to take or should consider taking when they are starting a business, even if it's just a side hustle to start. And then at what point do they do more? I guess maybe just help the brand new business owner. Maybe they just have the seed is planted that they want to start a business. What do they even do?
So a lot of times when a new prospective client comes in, I ask them questions that they're not going to know the answer to. And that's kind of the whole point, is if you knew all of the answers to these questions, then maybe you don't necessarily need an accountant. So for instance, like, what does your profit and loss look like? Do you know what you paid in taxes last year? What's your corporate structure? So really the accountant should be asking a lot of questions about the history of the business, what kind of expenses they have, how are they broken down, how do they keep track of their financial documentation, how are they legally structured, do they run a separate business bank account, do they have a federal ID number? So all of those, like, because I'm trying to get as much information from the client as possible to see how I can help them.
Sure.
So if they're asking all, like, if a client has to grasp for questions, then it's hard for them to leave thinking that they have a game plan. And really, when you meet with the accountant, you should have some type of game plan, whether, okay, now we're going to do bookkeeping. Now we're going to convert to S Corp. Now you have to pay estimated taxes. Whatever that is, you should have some kind of sense of, okay, we have a plan and I can stick to this plan. And at the end of the year, I'm not going to be overwhelmed or stressed by it or surprised.
Is there, do you recommend somebody just go to Google and find an accountant, local accountant? Do you recommend they talk to friends? Do they go on to the IRS website and look for an enrolled agent? Like, what is your recommended form for that?
So the IRS website goes in and out. And there's actually been a lot of controversy on what the IRS can actually post. So I would stay away from the IRS website. It doesn't always, like, right now it lists like just what your, like, that I'm a preparer, like a PTIN. And that doesn't tell you anything as somebody who's looking for an accountant. We actually really love Yelp because people are honest, whether it's good or bad on Yelp. And sometimes you're not going to make every client happy, right? Like, every client isn't going to be the ideal client that you work with.
Totally.
So there are going to be like some people who weren't extremely, like, over pleased with what you offered. Right. But for the most part, you should see a lot of positive reviews.
And what is the, like you're saying, like, what is the trend? Like, is there a pattern of the negative, negative, or is it like, okay, mostly positive and then one negative? And I also think too, like, how does the business respond to that?
Correct. Right. And then also referrals, a lot of times that's good and bad. So the good and bad is, like, I've been somewhere and they're like, well, my best friend is an accountant and they said this. I'm like, well, I don't know why they said that. I don't understand that at all. So then you, like, have a little bit of a cross mesh. So you do, accounting and taxes are kind of that one topic, it's like politics, that, like, you have to be very careful kind of how you broach it, because every accountant takes a different approach. And it's not necessarily that one is right and one is wrong. It's just there are a lot of ways to get to the result that we need.
Yeah, so, got it.
But do your research. And it comes down to, I don't know, like, my old, like, hippie soul says that, like, you should just have a good feeling. Like, when you leave, you should feel good about it and not, like, overwhelmed and that kind of thing.
Yeah. I think too, like, I like accountants that can explain things a certain way. So, if they're constantly using terms that there's no possible way for anyone to understand, and they don't even take a second to explain it, for a brand new business owner, that's probably not the best fit. Right.
Yeah.
And I'm not saying that they have to explain every little detail, but do they at least attempt to say, like, this session, you're going to learn a little bit more, and then next year you'll learn a little bit more, and then next year you'll learn a little bit more, and, like, grow with that person. I think that's good. And again, that's kind of a feeling too of, like, do I feel like our communication styles are the same?
Yeah. And jargon, like, I can use a lot of tax jargon, but if I go to the doctor, I don't want them to use a lot of medical jargon. I want them to be able to tell me what I need and how to make it better without all of their fancy words. So it's kind of the same thing. Like, you know, if you don't understand something, you have to, I always say that, like, you have to be as open with me as you are your spouse, because I need to know when you're spending money. I need to know that you're trying to buy a house. I need to know that you plan on having a baby this year. All of those things, like, completely change the outcast of what we're trying to forecast for you. And so if it's not somebody that you can have that close of a relationship with to tell them those things, or if you feel like you're going to be judged or questioned, then you're not going to tell them, and then you're just going to do it, and then you're going to end up owing taxes.
Yeah. I, just to, like, reinforce that, I remember the year Carmen was born, and she was due January 6th. Do you remember that? And
I
so
do.
you were like, if she's born in January, this is how much you owe. If she's born early, this is how much you owe. And we were like, come on, Carmen, be born early. And she was born on December 31st at like
She made it right in the nick of time.
3 p.m. or something. And everybody was like, you planned that. I'm like, no, but she knows who her mama is. She knows.
Right. She knew that her mom wanted that extra deduction. Now, when Carmen turns 17 on December 31st and you lose that child tax credit, you're going to be like, dang it,
You
just
little
one more day.
thinker. Yeah. Okay. So no, I think you're totally right. So let's talk. Someone's just starting a business. They're thinking about business structure and like, when do they open a business checking account? Go through some of the steps that a brand new business should or should not take. Like, what do they have to worry about? What would you say, Jessica? You're like, don't even worry about that yet. Like, that's just something, because I do think it's really overwhelming, right?
Yeah. So a business bank account is the very first step, no matter how you're structured and kind of what entity you stay with. And the reason is that the IRS will look at it and say commingling. So we want to see business funds going into the business account and business expenses coming out of the business account, even if that means that you have to float the business account money in the very beginning. It's completely fine. We just don't want those expenses to happen out of the personal account.
So it can be like a personal checking account that you just use as your, I mean, from the bank's perspective, like what they call a checking account, right? Like you just mean a separate checking account.
Correct.
Separate checking account that you purely use for business income and expenses, not personal. So it's just separate. And then whether or not, like, you go to the bank and you say, I want a business checking account, or like, that's just the bank's title for the type of account you're opening. Like that's sort of irrelevant.
In the beginning, it is irrelevant. Now, if you're operating under a trade name, most banks are going to make you have a business bank account because you're operating under the trade name, and then it ties together.
Okay, can you walk through a trade name?
So a trade name in Arizona, super easy. You go to Arizona Secretary of State page, and you click on trade name search. Look for your name, see if it's available. If it's available, it'll tell you. You can fill out, then you can print the paper form and it's $10. Excuse me. Or you can do it online and expedite it, which means you get it back in like instantly. And that's $35 or $45. I think it's $45. It's $35 for the expedition and $10 for the fee. And so then that trade name is essentially your business name. Later on, we can do different things with that trade name. We can convert it into an LLC, which will make all of our decisions. We can leave it like it is. We can convert it to a corporation or a partnership if we need to. So it's just
at that point, you get a trade name. You could be operating at that point as a sole proprietor. So
absolutely.
Sole proprietor, but you've got a business name, so people can like write checks to you. You can have a business checking account where you can cash checks under that name, all of that, but you don't necessarily have like an EIN yet.
Correct.
Okay.
Now, obtaining the EIN is completely up to you in the beginning. When you obtain a trade name and you want to operate under a business bank account, you do have the choice to still use your social. Some people who work a lot with vendors and things like that, who are constantly having to fill out W-9s, want to use an EIN to get away from using their social all of the time. The EIN is free to get. It takes all of 30 seconds on the IRS website. Just go to www.irs.gov and click EIN and then apply for an EIN. The EIN you can use for your bank account. Obtaining an EIN for a trade name like right out of the get-go is not necessarily the best idea. And the reason is that if we're going to convert that trade name into an LLC or into a corporation, we'll have to obtain a new EIN each time we change kind of what our entity is. So if you are kind of like, I don't really know where I want to end up yet, hold off on the EIN until you've met with your accountant and then kind of let them point you in the right direction. You don't have to have that.
Got it. So get a trade name, open your business checking account. Don't worry about the EIN. Get some things under your belt. And then when you're ready to become meet with an accountant, become an LLC, all of that, Correct. Then you can take that next step.
Now, if you know right away going in, I want to be an LLC, and that's all that I want to do. And I know that right away. Don't waste your money with a trade name because you don't have to have the trade name first. So
got it. So if you know that like, okay, this isn't just going to be a side hustle, this is going to be something bigger, right. Like I'm leaving my full-time job maybe, or this is something where I'm going to be making some money doing this, then I want to become an LLC. So I might as well just do what? What's that process then?
So that process is through the Corporation Commission, and that's the same for every state. Every state charges a little bit differently, but you go to Arizona. For Arizona, you go to Arizona Corporation Commission, and you click File an Entity online, and you create an account, and it kind of walks you through all of the steps of creating your LLC now. That was not the case before. You had to paper file, and that seemed a little like convoluted. But I tell everybody now that they don't actually need to pay somebody to, if that's all they want, like it's just the kind of the nuts and bolts of it. Now, if you're needing operating agreements and member statements and like all of the legal piece, that's completely different. If you're trying to create a corporate structure where you have members and a president and a vice president and you have all these shares, then that's completely different. That's kind of where more of the legal piece would come in. But otherwise, the Corporation Commission for Arizona makes it a little user-friendly to try to set that up.
Got it. Okay. So you would apply for an LLC, and at that time that business name is like your name. So you don't need a trade name necessarily. So you get the name, and then you take that. And I know for me with our new business that, the rental property, we took that, we went into Bank of America to open the business checking account. They applied for the EIN right there. Yep. And they said some banks don't do that. They won't, like you need to get the EIN. Don't do that. Yeah. So you would get your Arizona Corporation Commission paperwork back or whatever. You would then go on irs.gov, get the EIN, and then go into the bank and open a business checking account under that. Mm-hmm. Okay. So a little different process, but not a whole lot different.
Not a whole lot, no. So business bank account is like, or a separate checking account is the number one step.
Yeah.
Because if you don't do very good about keeping track of your income and expenses when you first start, if everything is in that one account, then we can go back to that. We don't have to dig through all of your personal receipts and all of that kind of stuff. So keeping it separate from the beginning. Number 2 thing is taking money when you need money. So people are always afraid to take money out of their business bank account until they've met with an accountant. Here's the secret. You're going to pay taxes on it at the end of the year, whether it's in your business bank account or in your personal account. So I've seen people who have been like so stressed about kind of what that number is or what they should do or what's required or all of that stuff that it just kind of overwhelms them from the very beginning. Take money as you need money for your personal bills. If you're leaving your normal job and you need that income, make a plan that you can go over that income, even if it's weekly. And a transfer is the easiest way to do that. You don't have to write yourself a check. You don't have to worry about payroll from the beginning. Keeping track of your income and expenses, business bank account, and transferring money over to your personal self are probably the 3 biggest steps.
Got it.
And then we can go from there.
Got it. Okay. Let's talk the LLC where you were saying like the state. Does it matter what state a person creates or files their LLC in?
Yes. So every state is different in what they charge for a renewal fee, first of all. So like if you live in Arizona and your business is based in Arizona, the LLC, you don't have to pay to renew that LLC. But if you live in California, you have to pay $800 to renew that LLC every year.
Every year. So how come a person in California, couldn't they just open their LLC in Arizona?
Then they would have to file Arizona taxes.
Got it. Okay.
So it gets a little, we've seen a lot where people try to open one in Nevada because there's no Nevada state tax, but then they don't realize that they're still an Arizona resident. So they still have to claim that income in Arizona when we file their personal tax return, even though the business wasn't in Nevada, unless we get like there's a ton of super crazy things that we can do. So I guess I shouldn't say that it's impossible.
Yeah.
It is technically possible, but most of the time not something that is worth for a business to do. I mean, if you're profiting,
I do know I mean, there are a couple of people who have been in California, and that $800 a year to start an LLC is a big hindrance. So I'm curious, and you can say, Jessica, that it depends. That can totally be your answer. I'm totally putting you on the spot with this question. If they live in California, so they're going to file a tax return in California anyway, couldn't they do their LLC in Nevada, still file a tax return, but not owe any state tax, I guess? Or does that not make sense so that they avoid the $800 fee every year?
Well, it doesn't make sense, especially in California, because California is kind of a monster. So if California finds out that you're operating business in California, then it's a different story.
Got it.
So I think it's definitely a unique situation. Like, it really just does depend. California is probably the meanest out of all of the states, besides New York, when it comes to structures. New York and California.
Good to know. Good to know. Okay. Let me see. So how you kind of said that, opening a business checking account, maybe doing the LLC paperwork if you feel comfortable with that initially on their own, or, going to the IRS and getting an EIN. And then after that and then keeping their business income and expenses separate and tracked, right? Mm-hmm. And then at what point should they meet with an accountant? Is it a dollar amount? Is it like once a year? At what point do you say, like, now you're at the point where you should really go sit down and talk with somebody?
So for everybody, it's going to be a little bit different. But I'm going to say, especially with the new legislation that's in place, that should be your next step within just a few months of starting.
Oh, got it.
Because there is a lot that has changed as far as even a sole proprietor who normally did their return might face difficulties doing that this year. It's a great tax deduction for business owners, but it's a whole separate calculation that people are kind of unaware of how that's going to work. That's the 20% that kind of exists right now. So I would say from the very beginning, talk with an accountant to kind of know like how much you're making and what the repercussions are going to be. What is the new tax bracket for you? So, it's kind of a good year to do that. Like right now, it's kind of a good year to do that anyways, because there have been so many changes, even on the personal side. You could kind of encompass all that together.
Yeah. And I find too, so like I might meet with somebody and say, here's, all the expenses we're going to pay out of your business, and here's all the expenses we're going to pay out of your personal. But now let's meet with your accountant and see what they think of this. Because it might be that they're like, you know what, this is a personal expense for a lot of people, but with your business, we could actually do it as a business or expense or something. Like I feel like even if they weren't working with, a financial coach, or these people are financial coaches, just getting that validation or confirmation, or just saying like, hey, this is what I'm thinking. Is this all correct? Right. And knowing moving forward that separation is being handled properly.
And let's say that somebody gets a new vehicle. Let's say that they buy a new truck. And so they're paying the payment for the truck out of the business. Okay, that's great. But at the end of the year, that's not at all what we're going to deduct. So that deduction is completely different than kind of what it looks like on paper. Sure. So if you're looking at it on paper and you're saying, oh, well, I pay $700 a month, I'm going to get to deduct that $700 a month. You could be deducting way more than that, or you could be deducting way less than that, depending on how that vehicle is actually set up on the tax return.
Right. And this is where the difference between what we cash flow, right, and what we pay for and what's actually deducted can be very different. And oh God, what a complicated thing to try to explain to a client too, by the way, right? They're like, no, why? And I'm like, because the IRS says it that way. I don't know, because it's just what they say. It's so stupid, but whatever. You know what I mean? So, okay. Let me see. We've got a list of questions here. So when should taxes be paid? Monthly, quarterly, annually? And try to break this down as far as like when you're first starting versus maybe like how do people know what to do?
So you don't know what to do. So typically your accountant should tell you, because every situation is going to be different. In the first year, a lot of businesses tend to operate as more of a loss or more of a break even. So then you really don't have to worry about paying any kind of estimated taxes. If you convert to a corporation, you're not going to pay quarterly estimated taxes. You're going to pay payroll taxes. So the conversation with your accountant needs to be, they're going to look at the number and they're going to say, you know what? You're going to owe $3,000. That's enough liability that we need to prepay at least $2,000 of it. So would you like me to break that up into 4 payments for you? Would you like me to just have you send one payment and then not worry about it anymore? So there's a lot of different ways that we can do it. And it's all going to depend on the independent situation. But a lot of people are like, I have to pay quarterly. I have to pay quarterly. And that's not necessarily the case. Very few of our clients actually pay on a normal quarterly basis. Because when you're starting to create enough profit that you have a tax problem, that's when we start to look at that S Corp structure anyways. And then it's all done through payroll tax.
Yeah. I know one of the worries that people have right when they're first starting out is like this, failure to pay penalty and like all that kind of stuff. And I always say, like, in your first year, you do not need to worry about that, right? Like in your first year, it's based on the prior year typically, right?
Correct.
Like, so if after you owe one time, then you got to worry about it. But like, if you didn't owe anything last year, then you don't got to worry about it this year.
And if you owe $500 at the end of the year, they're not going to assess a failure to pay estimated tax payments on a $500 balance. If you owe $10,000, they're going to penalize you even though it was your first year and you didn't owe the year before. So it kind of all depends on what that amount is going to be.
Which is why it's important to meet with an accountant pretty quickly.
Right. Just to kind of know. So the easiest way to tell is if you're taking money out of the business very easily and putting it into your personal account. I don't even have to think about it because I know that there's going to be money in that business account. Then that tells us that there's going to be some taxes that are going to be due.
Yeah, got it.
So, but a safe kind of note is just even if you haven't met with the accountant yet and the business is bringing in revenue, set aside about 20%, 20 to 25% for taxes and that should at least build that cushion even if you're not paying it. So if you do meet with the accountant 6 months later and they say that you owe, you kind of have most of it set aside.
Right. Yeah. And I think overall for me, like I want clients to feel educated and empowered by this stuff. And what I find is that they're so worried about it, so freaked out about it, that then they don't do anything.
Correct.
Right. So that's where I don't want them to be. So whether you owe or don't owe or failure to pay, it's like all this like fear-based stuff. And I don't know where, like at some point, I'm just telling you, I'm totally off track here, but that's fine. So at some point, I think somebody made the choice that accountants should all be like negative fear-based mongrels where they like freak everybody out and they make the IRS seem like this extremely scary, big bad wolf. Now, I'm not saying there's not instances where that could happen.
Right.
But for somebody in their first year of business or something like that is just
it's really not.
Yeah.
And I think a lot of it too is, let's say that you're in your second or third year business and we've had it. I mean, we've had mutual clients that have had this problem where they've had a really bad accountant and they thought that they weren't going to owe and then they did owe. And then now there's like a fear around all of it, right? Like, am I making the right decision? Are we sure? So even after you meet with your accountant that initial time, you need to continue to meet with them. If the plan is, I always say that if I only see you once a year, it's really hard for me to make the best decisions for your business from a tax standpoint. If I see you every quarter and I look at your numbers every quarter, then I can make refreshed decisions as your money starts to increase or as your profit line changes or as you're taking more money out because you're trying to save for a down payment, kind of whatever that is. So,
or bigger purchases in the business or whatever the case may be.
Yeah. So, and that, I think that goes back to when somebody's trying to find an accountant, that should be one of the things that they at least offer you to kind of give you that peace of mind that, look, we can rerun these numbers every quarter, or we can rerun these numbers every 6 months, even if you don't need me for any other service, that way we're always on the same page about what's happening.
I completely agree. I think especially when you're first starting out, there's so much stuff out there as far as like accounting for businesses or small businesses. But the truth is like, you don't need to know all of it. You just need to know what applies to you. And if you were meeting with your accountant at first every quarter, let's say, it might be that you run the numbers and it takes 10 minutes, but then you can spend 20 minutes like, no, tell me what I need to know about this. And you can start to educate yourself a little bit at a time. I think it's one of the best investments a small business owner can make is to have the consultant of an accountant on a very consistent basis. And I will say, like, I prefer accountants who are generally positive and problem solvers. So they don't necessarily say like, we have this problem and oh my God, like super negative, because there are those out there for some reason. I don't understand where that comes from. But I want a person to say like, here's what we're seeing on the horizon. Here's what some of the potential problems could be. Let's problem solve around that, but not be negative about it. Does that make sense?
You have to remember too, if you have a tax problem, that's a great problem. That
Yeah.
means that you have had a profitable business and you're making money. Like, it's way better than the alternative. Like, some people are like, I don't want to pay any taxes. No, you do, because that means that your business is growing and you're making money, and your hard work is paying off. And it's kind of like validation for all of the time and sweat and equity that you've put into your business. Oh, it is profitable. Like,
Right.
oh, I have a tax problem. That's very grown up that I
Yes.
have to worry about that now.
Exactly. So I totally agree. There are really good accountants, just like every industry, right? Like there's going to be good financial coaches and not good financial coaches. There's going to be good financial advisors and not good ones. There's going to be good accountants and not. So I think that these are just some things to think about. And when you're meeting and interviewing one, here's some things to kind of look for. Okay. As far as claiming a loss on your business for tax purposes, how do you go about doing it? What are the benefits and what are the downsides? Just expand on that question. You kind of just touched on it a little bit, but.
So when a business has a loss, it lowers your adjusted gross income. Lowering your adjusted gross income could be good or bad, depending on your situation. So here's an example. A single mom, 2 kids, shows a business on a loss on her business, and that's the only income she has. She's not going to receive any money back at all. She hasn't paid anything in. Single mom, 2 kids, shows a profit on her business, is going to qualify, as long as the profit's low, for earned income credit and child tax credit. So even though there's going to be a tax that would be calculated, that would be due, she's still going to end up with a refund because of earned income credit and child tax credit. So we don't want to leave that on the table, because so it wouldn't make sense to show a loss. Now let's say husband and wife. Husband has a regular W-2 job, wife has business. That loss would help them from a tax standpoint because it lowers their adjusted gross income. And their adjusted gross income, the husband has been paying taxes on all year through his W-2. So that would create a refund or less money owed.
Got it.
Now, the loss has to be realistic. So one of the things that the IRS looks at is how could you operate? So let's say that my husband had a W-2 for $50,000 and I showed a $25,000 loss on my tax return and I had 3 kids. IRS is going to say there's no way. There's no way that you kind of invested this unless something big happened that we can easily trace. Like maybe you bought a new vehicle this year and we depreciated it. They're going to let that go. But if it's $25,000 worth of meals or travel, then they're going to be like, all right, there's no way that this happens. So kind of how much the loss is should reflect to your adjusted gross income sum. And it should be particular for your tax situation. And it could result in more money back. The difference between showing a loss is everybody's like, what's that 3-year rule? The 3-year rule. And that's kind of sort of one of those like old myths. Like if a business shows a loss for 3 years, could the IRS come in and rule it as a hobby? And then you wouldn't be able to take any deductions. You would just have to claim the income. But that's not really what they're looking at. The IRS isn't that awful most of the time. What they're looking at is how do you spend your money in that business? Is it a business where I've continued to put money back into advertising for 3 years and that's why there's a loss? Did I purchase a whole bunch of new equipment every year because I'm growing my business? So that's why there's a loss. Did I have no income? And that's why there's a loss. I just wrote off expenses. Well, then your 3-year rule might come into play. So every situation is different. It's not something to fear about, but your accountant should be on that radar for you, kind of saying, hey, look, you're kind of running a hobby line, or you're getting way too aggressive in this area and not aggressive in another area. I always make the joke that I like you, but I don't like you enough to go to jail with you. Yeah. So if we're doing something that's going to get us in trouble, you need to be told that because you don't know. Yeah. And sometimes it's as easy as moving the way we classify things, moving things on a balance sheet.
Yeah. So. Well, I remember, I don't know how long we've known each other, Jessica. It's been a long time, but I know when the economy was really bad for a while there, and you and I were talking about how I felt like, at least my clients, like everybody was claiming losses for years. Like it was like 4 or 5 years. And the strong companies that had reserves at that time that were like literally just eating into their savings, but they were still showing a loss, right? Because they were operating at a loss. They were just eating into their reserves. They were surviving. Everybody else was sort of like closing their doors or going out of business. Exactly. But at most businesses at that time were just claiming a loss. Like it was insane from that perspective, like it was probably 5 years in a row that businesses were claiming loss, and the IRS wasn't like going after people saying you're operating in a hobby, you know?
Right. Yeah, and that it kind of goes back to what's going on in the economy. Like, for the past couple of years, the economy is picking up. There's a lot going on, and there's new jobs and companies and all of that kind of stuff. So in a year where the economy is doing really good, and maybe it stays that way for 5 or 6 years, it would be hard to get away with the same kind of loss that you could in an economic recession.
Yeah.
And then it also goes back to like a realtor. Every realtor in Arizona will tell you that the housing market is crazy right now in Arizona. So if a realtor claimed all of their mileage and offset all of their taxable income, it would be one of those things where you're like, I don't really know that we can do that in that way. Maybe
Right.
we need to find some other deductions. So
Right.
it depends on the industry and also what's going on in the economy. You're right. Because for those years, they didn't shut anybody down you were living off savings.
Is there, so when it comes to a business loss, there's no carry forward of a business loss. So if you don't get to claim the whole thing, like in that single mom example where she just like doesn't really do much for her, do you carry it over, or are you just like?
It depends. So it depends on what it was that created the loss, because sometimes we can put those items on depreciation.
Got it.
Or we can amortize them. So that way we don't really lose them. So while we might lose the cell phone bill for the whole year, we wouldn't lose the vehicle. We wouldn't lose any of the new equipment. So, and that's kind of how we have to pick and choose. Well, if we need some expenses, we want to use the expenses that we can't carry over compared to the expenses that we could carry over.
I love how creative accounting is, like especially small business accounting. I feel like is like really, you can be very creative because like you were saying, there's multiple ways to get a certain result and they're all legal. Like we're not talking about anything illegal at this point, but like whether you decide to take and expense something or depreciate it, like could have to do with so many different things, like what's happening in your, like in that example where the husband's working and getting a W-2 paycheck, like, well, is he expecting a huge commission check or bonus in January of the next year? And we actually want to like be able to lower some of those expenses next year because your income's going up or something. Like, it's so fascinating to me. Like, I honestly think it's like a really cool thing.
Well, and you never know what's going to happen from year to year. So like last year was the highest taxable year that most people had. So last year was the year where you needed to buy something, you needed to prepay, and that now this year that's completely different. So, I just had a conversation yesterday that said, if you want to buy a new truck, buy a new truck. But I'm not telling you that we need you to do that before the end of the year like we did last year. So, and it changes from year to year. So that's why it's always good to kind of be able to project your income, be able to project what's coming next, and then keep up with what's going on with tax legislation.
Got it. Okay. So next question. This question I think you answered. I'll just ask the question and answer it. Like, as I don't currently have a CPA, what level of income should I consider this as a necessity? My taxes for the recent past have been fairly straightforward and simple. So it's not necessarily a dollar income figure where they should use a CPA. Is there any other things that you look at that would be easy? Like if you have this, you should have a CPA. Like if you have a small business, you should have a CPA or an accountant or whatever.
Right. I mean, if you have a small business, you should have a CPA or an accountant from the very beginning. If you have rental properties, you should probably at least talk with an accountant. Those are kind of the two big ones. If you have a trust, if you have a partnership, all of those kind of things. If you have a farm.
Got it. Okay, good. All right. So the next set of questions, how should I pay myself? What is this idea of an S corporation? What are the benefits? What's the difference between S Corp and LLC? And is there an income level where somebody should consider that? So let's just talk about paying yourself first, I guess.
So paying yourself is going to paying yourself, the way we treat it is take the draws, take the transfers out kind of as you need them. Then we need to look at the numbers and we need to say, okay, what do we need to do with all of these draws? Are they just going to be draws because you're a sole proprietor? So an LLC has the choice to become a sole proprietor, an S Corp, a C Corp, or a partnership. So we have lots of choices under that umbrella. So if you just create an LLC and you're not sure where you're going to land by the end of the year, then we would just call those draws. Just take money consistently out of the business. Don't let the idea of payroll and paying yourself overwhelm you. If you need money, you earned it, like take it.
Yeah.
And then we're going to figure out what to call it.
Let me just clarify something really quickly. Cause I do feel like one of the things I've noticed working with like a lot of accountants with the clients, their accountants, is there are instances where the word draw, payroll, salary, dividend are universal. And then there's times where they're not universal. Like it's so funny to me where sometimes an accountant will use it and they just mean it as like taking money out of your business. And then there are times where they're like, I mean draw, but I actually mean salary, or I mean paycheck. And it's just like, I think that's one of those questions where like trying to understand what the difference is and really being specific with your accountant of like, no, which one do you mean like specifically payroll at this point? Or are you just saying take a paycheck and take a transfer out of my business? You know what I mean?
So like when we do owner payroll, we kind of tend to use those terms more universal. So that way it doesn't, I could explain draw and dividend and shareholder distribution. And then you're like, what is what? But so I just say, you take money out and you let me figure out how we have to code it at the end of the day. So I may run part of your draw as a payroll check, and I may run part of your draw as a draw. But you shouldn't have to worry about that a lot. Like a good accountant should kind of help like walk you through that and take care of that to simplify that as much as possible. That's what they call after the fact payroll. So in the beginning, I think like the idea of a live payroll check, if you would have told me that I needed to take a payroll check always on the second of every month, I would have had a heart attack because I don't get my money on the second of the month. I don't get my money until closer to the middle to end of the month because of how our billing cycle works. So we have to take all of that into consideration when we're telling you how much money to take out of your business account. And in the beginning, you're not going to know, and those amounts are going to change. So that's why I say kind of take what you need and then let your accountant help label that for you as to whether you just always call it a draw or you do after the fact payroll or kind of whatever the case is. But you should never have payroll of any sorts for yourself unless you're taxed as an S corporation.
Yes. Okay.
That's the only guy that gets to put yourself on owner payroll. You can have payroll for employees, but not payroll for yourself unless you're an S corporation. So that's also a good indicator when somebody comes in.
Okay. So explain S corporation. Like why is that different and all of that?
So S corporation is a different tax. They're part of your...
Just a second. Say something again.
An S corporation.
Your mic cut out or something happened for a minute, but it's better now. Keep going.
So an S corporation is a different type of tax. And under an S corp, part of your profit is not subject to self-employment tax. So as a sole proprietor, all of my profits are subject to a self-employment tax plus federal withholding tax. So that's why we don't care about whether it's a draw or a distribution because it's all profit and we're paying tax on all of it. But under an S corp, we can avoid part of that self-employment tax by putting some type of payroll structure into place where we have payroll and draw or distribution. And like I said, we try to like simplify that to where it's just an amount that you're taking out at the end of the year. But we tend to eliminate a lot of taxes. But there are costs with an S corp that you wouldn't have with an LLC or a sole proprietor. So a money number is actually an important indicator. So when we look at profitability, kind of that number that's left over, that number that you're pooling, if it's over 20, 25, we want to start having the conversation. Still may not be the best fit for you, but we at least want it on our radar because there's different instances where we have to take that S election. So if we meet in January and last year your profit was $20,000 and your income is up, I have to make that S election before March for you. So we have to have that conversation about, all right, well, what happens, because we can't go back without penalties and kind of some wiggle room there, but we want to kind of know that plan going forward. We don't want to be trying to run all of your payroll in December for you. Your first year as an entity, we have a lot more liberation with that kind of stuff, but the number is probably around 20 that we at least want to have a conversation.
Got it. Yeah. So, and to clarify, like the fees of becoming an S corporation, you have to be on payroll, right? So you've got to be submitting some things consistently. So there is usually an expense there to have somebody like an accountant do payroll for you. There's the filing requirements, a balance sheet, right? So, and the S corp tax return is more cumbersome, more complicated. So it's usually like the accountant charges more for an S corp filing fee versus an LLC. So you want to look at that. So if all of those fees are less than the amount of tax you would save by filing it as an S corp and avoiding that self-employment tax, then it makes sense, right? But if all of a sudden all of those fees, you're still at the point where like, nope, we're not there yet. Like you wouldn't save enough to make up for it. But like you're saying, you want to have that conversation at some point.
Right. So like if you're only going to save $500 when we do the calculation, I'm going to tell you it's not going to be worth your time and headache to save $500. Like, because fees go up, you don't know. I could change my prices in 2 years. And now you're stuck in this S corp where you don't make any money at all from it. So we want to see a significant tax savings because it is going to mean more paperwork. It is going to mean like more education and more kind of trying to understand what's going on. I actually think I love S corps. I told you earlier, that's what our like niche has been, but I think it takes at least a year for a business to operate, to see it on a tax return before it starts to like click a lot easier. Like, oh, this is what's going on. Oh, this is what she meant by all of this. Because it is a different lingo and it is completely different than what kind of you're used to. So sometimes I think that people like try to do an S corp and they're so like overwhelmed by it. And I just say, that's okay, because most people are overwhelmed by it. So give yourself a year to kind of get used to the process. And then we'll kind of circle back to make sure that after we do that first tax return, it really clicks for a lot of people who it didn't click for before.
Right. Yeah, it's kind of like peeling away an onion. Like you just one layer at a time. Don't worry about it. Yeah, this is one of those things where it's like just push that off for a little bit, just temporarily, so that you can really figure out the flow of your money in your business and get all that hashed out before you all of a sudden start thinking about S corporations.
Right.
Okay. What are some things that most people don't deduct as business expenses, but actually are deductible?
Meals. Now I will say entertainment is kind of the big buzz because you supposedly lost entertainment. And I make the joke of how much was it entertainment and how much of it was advertising. So if I buy movie passes, instead of taking my client to a movie, I buy movie passes, spending the same amount of money, but now it's an advertising deduction, not an entertainment deduction. I'm not losing that deduction. We buy season tickets sometimes, and we give those away as giveaways. So I think that sometimes people forget the everyday stuff that they spend and how it can be incorporated into a business expense. Cell phone, home internet is probably the biggest one that people don't use.
And they don't use it as part of like the home office deduction, or they just don't use it at all? Or what do you mean by that?
Or just like running it through the business.
Got it.
So as the business has more profit, we want to see as many deductions come out of that business account because it just kind of validates them in front of the IRS. Vehicles are the next biggest like cluster. Everybody is worried that it has to be in the business name or the financing has to be done through the business, and that's not the case. And so the vehicles for sure, internet, and kind of that advertising and meals approach. I'm going to tell you when you have too much in advertising, and it's very rarely the case because most small businesses don't pay a lot for advertising. So when we're running a percentage of numbers, we have some room there. It's really good to list your expenses so that a way you and I both know what you have. Because let's say that I have a timeshare. I may not have thought of that as a business expense, and I might not ever communicate that with you. So all along, I could have had this write-off that I could be using, but neither one of us have had a conversation about it, so we don't even know that it exists. So if we kind of list those bills from the very beginning, or at least like know what you have going on, your financial coaches are going to have spreadsheets for their clients where we can see all of the ins and outs in one glance for their personal as well. That way we can make sure that we move things to the right place.
Yeah. And so the timeshare, that's like a retreat destination for the owners, or like a planning like you could say that that's our annual mastermind strategy meeting for the company or something like that. Is that what you're saying?
Yeah. So it could, like, I could use it as a giveaway. I could give away the week wherever. I could use it. So then it would be advertising. I could use it as an employee fringe benefit because the employees are the ones using it.
Got it.
Those are kind of the two. So like, or continuing education, even if I wanted to host a seminar there, I could use it under that same term.
Yeah. And I know, I'm so, I think, grateful that I was in corporate accounting for 6 years before I started my small business, because I saw so many expenses that the big company that I worked for was able to write off because they were a bigger company, it felt like, right? Like they weren't so worried about it. Like small business owners just tend to get like really scared about certain things, so they would pay once a year for all of the VPs to like go to Hawaii for a week, right? And there was all expenses paid, and like the company wrote all that off, right? So like if you are the owner of your company, like have a conversation with your accountant about like, how can I pay for something like this for myself? Like, what do we need to do to make it justifiably deductible? Right? Like exactly, like just have that conversation ahead of time, because it could save quite a bit of money on your taxes. And especially if it's like, you need to do X, Y, and Z while you're there. Done. Like I can make that happen. Right?
Yeah.
So,
absolutely.
Okay, good. Any other tips as far as taxes are concerned for self-employed people or when they're first starting out?
I just keeping track of everything and having that conversation with the accountant. And especially right now, don't read an article somewhere and think that's the case. So a lot of people are so afraid that they've lost all of these deductions and things like that. If you're a business owner, you have it. Now, there are lots of other circumstances that you have. And there's some stuff there. But as a business owner, that the entertainment is really the only one that's changed. Everything else has kind of stayed there and just gotten better.
Everyone's talking right now about the 20% thing, like expenses at 20% and blah, blah. I'm like, I don't understand it. So I was going to ask you this, we have a meeting coming up for myself next week, right?
Yeah. So what it is 20% of your profit is not taxable from the federal side yet. So if my profit was $60,000, I get to deduct $12,000 as a new deduction. And then, of course, that's going to lower my tax liability. So
and that was not like that last year. So last year was all $60,000 was you paid tax.
Taxable, right? So the standard deduction changed and the personal exemptions changed. Everybody kind of knows about that. The people who, I think a lot of people are talking about dues and business expenses not being written off, and it's because what form it is Form 2106, and that's a non-reimbursed employee expense. So if you were a firefighter, you used to be able, if you itemized your deductions, and if you had enough for the calculation to even calculate, you could write off your uniforms, your union dues, your meals and entertainment, your safety, and anything else that you had.
Anything that you paid for because you were a firefighter, essentially, and the the place didn't reimburse you, your boss.
Correct.
Okay. Yeah.
Yep. So anywhere you worked, but I tend to think more of local law enforcement in that area, because a lot of other places reimburse for things now. Mm-hmm. And a lot of places that didn't used to reimburse now because their tax rate got cut by 20%. So, but that deduction was limited to 2% of your adjusted gross income. So let's say that you had $100,000 adjusted gross income, only $2,000, the first $2,000 wouldn't count, and then anything over that would count.
So you had to have expenses over $2,000 in that case, or over 2%, and that was the portion that you could deduct. So it's not like you even got a dollar for dollar. It was just the deduction.
Correct. It just got added into your itemized deductions.
Got it.
So if you didn't have mortgage interest, more than likely you weren't using that deduction anyways. You were giving receipts, but it wasn't calculating for you because it still wasn't enough. So over-the-road truck drivers is also a big one that impacts because of their mileage and days out and all of that kind of stuff. But a business owner, none of that changed. The only thing that changed is that interpretation of entertainment. Entertainment is gone. Meals is not gone. Entertainment is gone. So focusing more on what could be advertising. And then the new is the 20%. So that's the special calculation. So that's why I mentioned earlier that even if you've always done your own sole proprietor tax return, you're going to want an accountant to at least look at everything this year because it's a separate calculation that's supposed to occur.
Got it. Okay. Let's see. The last question, and I'm just going to read it as they asked it. As I start this process of opening a business with plans to possibly be relocating in the next 10 years, maybe opening other businesses, what would be the best way to prepare for these things at this time? An umbrella company with DBAs, question mark. If I change states at some point, should I trademark now or later? And like, I think the answer might be like, it really depends. You should sit down and talk with somebody. That's okay. Like, it sounds very complicated to me, but you tell me, Jessica, I don't know.
So if you're planning on staying within one state, an LLC with DBAs or an LLC with LLCs under like an umbrella LLC is a great tax strategy. Excuse me, for somebody who has multiple businesses. So what happens there is all of the profits can funnel up, and then we're using one tax for an S corporation where we have payroll. We're not running payroll under 10 different companies and doing 10 different S corp tax returns. That gets very overwhelming, especially in a state like Arizona where we don't have to pay to renew that LLC every year. Now, if we're in a state like California and we have to pay $800 per LLC, we might look at a DBA under each of those instead of an LLC. And at that time, you're not really giving up a lot tax-wise. You're just giving up a lot from a legal standpoint. And so you would want to talk with your business attorney. Trademarking is typically done on a federal level. So you could, though, trademark federal, and that doesn't necessarily mean that the state has to tie into that trademark name. So if you trademark ACP, the federal is very particular about how close to ACP that I can get. The state is not so much. Those two barriers don't tend to talk to each other a lot. So you would also need to state trademark, because I could have had ACP for federal, but I could get ACPS, and that doesn't mean that I could have the domain name ACPS, and then it's so close that even on an engine, even on a Google engine, I show up when you're supposed to be showing up. So definitely talk to an attorney. I would always say federal trademark. Wait till you're done. Federal trademarking costs a lot of money, and I mean, if you have a solid, unique product or something that's completely different, then by all means trademark. If it's just a regular service, I don't really understand a lot of the trademark reasons behind those guys a lot of times. If I have this app that I'm trying to develop, I could see a trademark need there. But if I come up with a cool S corp way to calculate taxes, probably not something I want to waste my money and resources trademarking, because that's very expensive. So I would wait till I relocated. As far as setting up the LLCs, I would go ahead and set them up now as you need them, because then you can incorporate them into whatever state you're at for a foreign entity. But again, make sure you talk to your accountant to kind of see what that whole picture is, because that could all change.
Yeah. I mean, I really feel like if you're the type of person that's going to be opening multiple businesses and you are moving and you're like, that's a perfect person where like, you should have an accountant like on speed dial, like that person you pay a retainer to every month. Like that is your best friend, right?
Yeah. That's a lot of moving pieces.
And you want to have somebody who's really creative and can, talk with you about all the changes, because it could be from one month to the next there's a change, right? Not even quarterly, just every month there's a change. So to me, like this sounds like somebody who really just needs to have a really good accountant in their back pocket.
Absolutely.
Okay. So Jessica, how can people contact you if they, want to talk with you about services and all of that?
So the easiest way is to go to our website, www.acpaccounting.com, And you can read our bios, you can read what the services that we offer for businesses. So we kind of keep it simple. We have a bookkeeping package and a payroll package. We of course have consultations and meetings and all of that kind of stuff. But as far as like your monthly regular service, it's kind of all outlined there. What would be included and how much that would cost. You can schedule an appointment right online and would be a new business consultation, and the pricing and everything is right there for you. So,
wonderful. Wonderful.
Wonder who I got that one from.
I love your pricing structure as far as the fact that like I pay a monthly fee and it includes so many consultations per year, strategy sessions, we'll say, because they're not really even consultations at that point. It includes the bookkeeping and the payroll. So like, it's just a flat fee. I don't have to pay like, here's the price. And you probably know like how much I pay for each of those things. But for me, I just know that like, you know, I've got a session with you next week because a lot has changed this quarter. And it's like, hey, I'm scheduled to meet with my accountant. I don't have to like email you a question because I know I have this scheduled appointment coming up. I know there's like check-in points throughout the year and it's all built in, which I just think that makes so much more sense. Like I wish all accountants did it that way, you know, like because I think from a business standpoint, like I feel like, well, is this really a justifiable question to like schedule an appointment for, right? And like I don't know, right? So I know, like, I think a lot of business owners might go a longer period of time not asking certain questions, or they just like blow up your inbox and your email or phone call or whatever, because they think, well, this is simple. I don't need to like schedule a session for this. When you're thinking, in order to answer this question, I need to ask you 10 more questions back.
Right? Yep.
So those check-in sessions, I think, are brilliant. Like they're scheduled, they're there. I mean, they just make total sense. So.
Well, and I think like we just sent an email out to the people who hadn't scheduled their like mid-year session is kind of what we called it. And I said, hey, remember, this is the session that you've already paid for. So now you don't have an excuse not to come. You don't even have to be like, oh, I have to pay my accountant $1,000 this month to go see her. Like it's like everything is already there. So, you know, it just makes it easier too, from that standpoint, to not stress about it. It's not a new extra expense that you have to come up with.
Totally.
Already paid for that session.
I love it. Yes. Good. All right. Well, thank you so much for your time, Jessica. Thank you for all the education and all the knowledge that you just dropped on us. I really appreciate it. If anybody has any questions, please check out her website, www.acpaccounting.com. She's a wealth of knowledge. If you are in Arizona, California, it sounds like I highly recommend Jessica. She's my accountant and I love her. And I know that she's creative and she's a problem solver and very positive and good to work with. So I will talk to you later, Jessica. Thank you.
All right. See you later.